Hello, welcome back. This is Seewing Yee, and today I'm going to pose you a question. I want you to make a comment below, and I'll be more than happy to reply to your comments. What if the mortgage rate is going back down to 5%? All right, so we got throughout this video, we're going to go over the mortgage news daily, the mortgage rates as of today, and the mortgage rates where we had a 5% mortgage rate. What month and year was that? And how was that housing market at that time compared to right now at 7% mortgage rate? And I'm going to go over the Redfin data to share with you what was the market like back recently when the mortgage rate was 5%. Because be careful what you wish for, because if what you wish for comes into fruition, for example, the 5% mortgage rate. So some of you are thinking, oh, wow, that's the case. I will get back into the housing market. Don't be so quick to enjoy a conclusion because there's a lot of potential red flags or scenario that could occur if the mortgage rate falls back down to 5%. So be careful what you wish for, all right? So let's go over the data. I will go over the data, then I will share with you my personal thoughts based on my years of real estate investing experience. Again, feel free to make your comments. Everybody have their own opinion, whether you're a professional or amateur economics, what have you. It's an opportunity for all of us to brainstorm. I'm not going to ridicule anyone. People have their own unique perspective, their own unique educational background around real estate, what have you. But I welcome all comments as long as your comments are reasonable and not belligerent, whatever. So without further ado, let me share my first video, and I'm going to go over this 3 or 4 minute video interview by, I believe, by Yahoo or CNBC, probably CNBC. This individual is being interviewed. I never heard of him, but he comes with a little bit of credibility. Otherwise, CNBC would not provide his input to the national mass media. His name is Robert Refkin from Compass CEO. So let's hear what he has to say. Let's play this video for several minutes, and I will pause at least once to share my quick thought. Then after this short video, then we'll go back to Mortgage News Daily to go back to the future. No, not back to the future, back to the past to go over what 5% mortgage rate was like perhaps last year. We're seeing what are the potential ramifications if the mortgage rate will come down to this level and how it's going to affect everyone. Here we go.
Bring in Robert Refkin. He is CEO of Compass. He joins us here on set. Great to have you back with us.
Glad to be here.
This just brings me right back to the beginning of the year, talking with you, and you said, you know what, the bottom's in for housing. I'm going to call it right now. And so far, it does look like the data is moving in your favor. Bottom or not, it does seem to be stabilizing. We do seem to be
across the board, there are more buyers than sellers. Buyers have accepted 6-7% mortgage rates as a new normal. We're seeing prices increase every month this year versus the prior month. And now it's just 3% lower than it was at the peak last year. The issue that we have, there's just not enough inventory. And that's because 30% of homeowners are locked into mortgage rates at 3% or below, and 70% of homeowners are locked in at 4% or below. Great time to be a home builder because they're benefiting from the price increases that are a result of low inventory.
Yeah, I spoke to Cheryl Palmer from Taylor Morrison this morning. But certainly the home builders do seem to be moving to fill in that void to the best of their ability. Are you seeing that in terms of where you're generating sales or agents are generating sales as well? And if so, how much are things like incentives playing a role in that?
So there are definitely incentives and buy downs bringing mortgage rates down by 2 points in a number of our markets. But there was already a trend of not enough inventory and a second trend of people want things that are move-in ready. They want homes that are prepared. There's a product at Compass called Compass Concierge. We prepare homes to make them stage, painting, keep cleaning, and just make them move-in ready. So one of our best products. But now there's just not enough inventory of existing homes because people are locked into low rates that the home builders are meeting. They're meeting that demand. We actually saw last month the largest amount of housing starts since 2016. And that's because home builders, their sentiment index improved for the first time in over a year. Tell us about two things, two A's, ARMs and Airbnb. So adjustable rate mortgages, are you seeing people pick those more now that a lot of people think we're near the top as far as where rates are going to go? And then the last time rates were this far, it was a lot harder to monetize a property that you owned if you weren't going to live there anymore. So has that affected the inventory issue in a way that you can really see? Yeah, so we're seeing people that are buying because they have a new kid, they just got married, another life event or a new job that have to buy. Instead of selling their pre-existing home, they're just renting it out and taking the financial arbitrage of high rents and low mortgage rates. So we're definitely seeing that, whether it's the Airbnb or not.
But quick high level takeaway from what he said is that at 6 to 7% rate, we are at new normal. Right? We are going to a new normal housing market. People accept the 6 to 7% rate. And also, we have a lot of book owners right now, a large percentage of them or they have a locked-in or historical slow rate of 3 to 4%, and they're not budging because today's rate 7%, there's no way they're going to move up as a buyer. So they're going to lock into their historical mortgage. And then he said, the winners in this housing market right now, the winners are the home builders. He's saying that the home builder can create the void. They're going to offset the resale inventory, which is right now trending toward a historical low supply of inventory. And he seemed to think that the builder can ramp up construction to catch up with the supply of inventory. But I have some reservations about that. The home builders, I believe, they are unable to offset that this quickly. It takes time for home builders and country to ramp up home construction to meet the high demand from in the housing market. Right now, we're at a historical low inventory. What does it take? What does it take to increase the supply of inventory? What does it take for the home buyer to get off the sidelines and start buying? And he's about to make that comment. The comment will be answered very quickly by him. So let's resume the recording and listen for around 1 more minute. Then I'm going to provide my personal thoughts. Okay, here we go.
And the issue that we are seeing is we need to have an unlock of inventory. It's probably going to happen when mortgage rates get to 5.5% in a sustainable level. At that point, I would expect there to be a flood of inventory in the market. It'll feel like the pandemic craze all over again. And what are you saying on adjustable rates? So on adjustable rates.
Okay, that's all we need to hear. So he's saying once the mortgage rate comes back to 5.5%, it'll unlock the demand and the housing frenzy is going to occur. So let's take a deep dive on what do you mean by that. This is a very crucial moment because it's not that simple. Right now, we're at a 7%, almost 7% mortgage rate. As we speak right now, it's 28 June 2023. So let's go over the mortgage daily news information right now. As you can see, today's mortgage rate with people with credit is 6.9% interest rate. And let's go over this 5-year mortgage rate chart. And so he mentioned 5% mortgage rate at 2% reduction. That is a very steep reduction. As a matter of fact, a year ago, prior year, on June 28, 2022, the mortgage rate were 5.95%, almost 6%. So year over year, in June, the change was plus 0.96 basis point, almost 1% higher the mortgage rate this year compared to last year, June 2023 to 2022. Now, so the question is, are we going to go back to 5%? Let's see what happened last year when we are seeing 5%. So let's go over 2022, right? 2022. So around April, right? You can see right here, around April 6, 2022, we have seen around 5.8%. That's close enough. See, we're seeing the skyrocketing in mortgage rates from the low of the beginning of 2022, the loan was 3.7% at the beginning of 2022. Then all of a sudden, the Federal Reserve broke the housing market by shocking everyone in the housing market by raising the rate to fight inflation. As a result, from February 2022 to 4 months later, until then April of 2022, when the mortgage rate was around 5%, we are still seeing multiple offers. We are still seeing bidding war. Exactly what is the scenario? I'm not really quite sure. Let's use a hypothesis back in April of 2022 last year, when the mortgage rate was 5% at this level right here. That's a lot of the people, they are going through a buying frenzy. Okay, when people seeing the rates has skyrocketed in the middle of last year, they want to lock in the 5% rate. So we are still seeing multiple offers and bidding more. I don't know, maybe 15 to 20 offers at that time before, because they know the skyrocketing of the rates typical and look to a point where in November, October, look at this. In October 31st, 2022, last year, the mortgage rate skyrocketed all the way to 7.13%. As a result of that plunge, the demand of home buyers out there, a lot of people cannot afford this high rate and this high property prices. So the second half of last year, 2022, we have seen housing prices decreased around 7 to 10%. As you can see right here, the mortgage rate came all the way down in the second half of last year. So as a result, the sellers are not selling. There's not enough buyers the second half of last year. And the western region of the U.S. have seen the largest boom to bust housing market, especially in Arizona, in Las Vegas, in Austin, Texas, and in California, for example. However, in the other areas of the U.S., in the Midwest, Northeast, and the South and Southeast, the housing market was still pretty stable. They did not go through a steep decline that the western region of the U.S. has done. Again, that's what I've seen. And so with that in mind, let's go over this final chart I want to share with you. And not this chart right here. The final chart. Okay, let's go over the Redfin final chart right here. In April of 2022, when the mortgage rate was 5%, we are still seeing some housing frenzy, some lot of transactions going on. And you can see this black line on 2022, a trending line. We've seen the housing prices continue to go up. We went all the way up from February of 2022, February, March, April, May, June, July. Still, housing prices have gone up until right about June of 2022, when the peak of the housing prices in 2022 has subsided. And then when the mortgage rate skyrocketed, the demand decreased. And then we've seen some housing prices decreases in certain part of the country. So here's my takeaway as we conclude this. Right now, we're seeing 70% mortgage rate. Yes, a lot of potential buyers cannot qualify anymore. I get that. And yet, and right now, the mortgage holders, most of their existing homeowners right now, they are not bulging. They're sitting pretty on their historically low mortgage rates. They're not going to give up the 3% mortgage rate to move into a 7% mortgage rate, essentially doubling their mortgage payment. So they're sitting pretty, perhaps for the next 28 years. For the next 28 years, when they refinanced 2 years ago, right? So they have 28 more years to pay off their mortgage. So who knows, right? That segment of the population of homeowners, they're not going to sell. So the historically low supply of home inventory will persist for a long time to come unless the mortgage rate comes back down chronologically, steadily. So right now, think about this. We're at 7%, and yet the supply of inventory is about 2.3% right now, which is very low. The balanced market, a healthy market, is between 5 to 6 months supply of inventory. We are so far from reaching that level. And the builders, I believe, that they can't ramp up enough. It takes time to permit the homes, to get the homes built. It takes time. It's not going to happen overnight. The new construction homes just not going to have enough inventory to make a difference, at least this year, for the remainder of this year. Think about this. Think about this. Right now, in many markets across the US, especially the lower entry-level homes, home prices, and below medium price of those homes, many markets, those homes are well priced well accordingly, and they are turnkey, they're all fixed up, they are being gobbled up very quickly. The average offers like 3 to 5 offers per house, and typically 5% above asking. That's what we're seeing in many markets across the US for the past few months already. Okay. And due to lack of inventory and demand are staying pretty good, because 20% of the potential buyers staying paying by cash, totally bypassing the mortgage rate volatility. There's still a lot of money out there. There's still a lot of people sitting on the sideline, people waiting to take the plunge, and a lot of people still can afford it, believe it or not. So you'd be surprised. We've seen that. What if the mortgage rate will come down from currently 6.9% to, let's say, 6%, hopefully by the end of this year? If this prediction comes into fruition, what do you think? A 6% mortgage rate? I'm thinking there will be more supply inventory. Where does supply inventory going to come from? It's going to come from those existing mortgage holders who are holding 5 to 6% interest rates. They may be willing to sell their home to move up to buy another home on a higher price home, potentially at 5%, 5.5%. So yeah, inventory will keep up, will increase a little bit. Not everybody going to sell just because the mortgage rate has fall similar to the mortgage rate they have right now. Bear that in mind. The remainder of the homeowners that have mortgages between 4 to 3%, most likely, most of them are not going to sell their homes unless the mortgage rate will fall to 4 or 3%, which I do not expect to see in our lifetime. So let's say 5% is the best case scenario. If 5% were to occur, I tend to think because the pent-up demand is even greater than the potential supply given this scenario, I think at 5%, we can see a housing frenzy, and it's not a healthy one. We might expect to see 10 to 20 offers per house. We may see 5 to 10% or more at over asking, above asking price, 5 to 10 or even 15% above asking. So we're talking like this is frenzy. There will be a lot more competition. We have more cash buyers. We have more buyers competing against still limited amount of inventory. So it is not a healthy market. As much as I would like to take advantage of this double-digit appreciation again, and we can see it's a very risky proposition for the to maintain stability of the housing market. So I do not want any kind of mortgage rate can fall below 5.5%, really, let alone 5%. We don't want another skyrocketing of home prices, bidding war everywhere, where you could bypass inspection, bypass appraisal, and don't care about how the house look. So this kind of frenzy, this FOMO, fear of missing out, things happen over again. I do not want 2021, year 2021 to happen again. This is a historical year. Historical times is an anomaly. Remember back in 2021 at 3% mortgage rate, its supply of inventory is only like 1 month supply. Some market, there were 300 offers per house. For example, in Austin, Texas. I've seen that. I remember that those days a year and a half ago. We don't want that. So if the mortgage rate stays, my opinion, I want the mortgage rate to be around 6 to 6.5% to allow the housing market to come back to normality, to come back to a healthy, stabilized marketplace where there's enough buyers and there's enough sellers. Well, I want to come back to a 5 to 6 supply of inventory so the market will be healthy. Everybody can achieve their finally the American dream and the first-time home buyers, and they've already been priced out of the housing market the past few years. because they have limited resources. So that's really a big challenge. So that is my takeaway. So what are your thoughts? Again, please comment below, share your thoughts. I'll be more than happy to reply to some of your thoughts as long as they are reasonable, logical, and not belligerent comments out there. All right. So that's pretty much I have to say. Yeah, if you see a lot of value from this video, please smash the like button and subscribe to my YouTube channel. And finally, please enter my website below and put your email on there so you become a free member of our real estate investment club. So and every week on your email inbox, your weekly real estate investing information so you can get better informed, better educated, so you can potentially take action, become a real estate investor, and create generational wealth for yourself, your family, and your loved ones. All right, so thank you for watching. This is Seewing Yee, and I will see you on the next video show. Have a nice day. Bye-bye.